Hello traders and welcome to another video review. Today is Monday, July 20th, 2026. Let's take a look at the Forex economic calendar for today. As you can see, that today's calendar is full of the medium important data release. There is no high important data releases. Trade balance data from New Zealand were published overnight. We are still low on People's Bank of China low on prime rate has been published overnight as well. German PPI data are scheduled for release at 8 o'clock. Then we have some bunch of data from the Canada in form of the core PCI and PCI scheduled for release at 2:30. As you can see, those are not really important data releases. Those data releases are just medium important. So that's about it. That's about the calendar for the Monday. So without any further ado, let's switch to the charts and we start with euro dollar. For our time frame chart of the euro dollar, it doesn't actually show any sign of the improvement. We have a breakout above the 1.1475 last week. Nevertheless, we come back inside the range, like in the middle of the range, as you can see, just above the upper channel line. So this range here established at the beginning of the month, 1.1362, 1.1475 is still the sideways range, and this situation here might stay like this for the time in the coming days. As you can see, momentum is oscillating around the level of 50 as well. Right now, 49.96, almost perfect neutral environment. Cable established the swing high at 1.3557 as this movement to the upside has been developed quite well into the extremely overbought conditions. Then we went as low as the level of 48, so we have a pullback. There's one thing we should do here is to place the swing high at technical resistance. There you go, 1.3557 local technical resistance. Nice pullback to the downside. This will be, of course, the resistance, so it will be red. Those levels here will be red as well. And despite the fact that we went as high as 1.3557, this decline to the downside might be still the part of this movement to the upside. However, it's the biggest correction since this low here at 1.3159 has been established. So please consider the situation when the corrective cycle to the downside might deepen towards 1.3383. US dollar versus the Japanese yen, still building the triangle, maybe, possibly. However, on the momentum broken out of the triangle, but there is no follow through, so it means that we still are building this kind of a movement without any rather pause or something like this. And the situation here remains the same. Maybe just this upper channel line might be a little bit higher. So let me just move it towards this level here. There you go. So we are still developing this triangle. 162.86 is still the swing high. Bullish development in the background, uptrend in the background. So we should see upside movement strongly developed to the upside during this trading week. The gold market sits at the level of 4,000, just above the technical support located at 3,943. So as you can see, this level here must be violated if we want to move any higher up. Apparently this is exactly that level, 4,218 technical resistance, obviously. And if we zoom out, you can clearly see that there is a weakness in the background. Some kind of a base is being built here, maybe good for the bounce, maybe not. We'll see in the future. However, so far with this kind of the momentum, the negative momentum, the downtrend in the background, we should see only the downside movement developing lower and lower as you can see here, to the downside from the 4,200. So no change here in the gold market. S&P 500 early Monday morning, local low 7,430. As you can see, again, this level here has been tested by the market participants. If it holds, there is a chance for another movement to the upside. Nevertheless, this situation here starts to look quite interesting, as there is no big movement to the upside. As you can see, some sort of the consolidation, some sort of the pullback has been made, but there is no momentum to the upside just yet. No momentum to the upside, and the market doesn't actually want to go above the swing high at 7,620. So right now it's good to just to watch this levels here of the technical support for possible breakout and eventually the test of the blue trend line. Crude oil covered the gap, so the ABC movement to the upside is now maybe not invalidated, because it's still valid if we apply the wave C high here at the level of 85. Nevertheless, I will just remove it. What kind of a movement to the upside we have these days? We have the movement to the upside, which is bigger than 27%. Right, so 27%, quite nice. 1/3 of the overall movement to the upside has been done. Look at this, very nice movement to the upside, of course fueled by the geopolitical tensions yet again, but from the technical point of view, we have covered this gap here. So this gap is gone, gap is covered now. We got technical resistance, the other technical resistance, this level here 80.55 might be changed for the technical support, but because it was tested so many times, now it is just a regular technical support. So we went as low as we established as we wanted the market to go, so $67 per barrel, right? So we went as low as this, and exactly from that level we have the bounce to the upside. 84.48, almost 85.34 was the local high. If the geopolitical tension will increase, that will be even bigger. And the Bitcoin yet again doing nothing these days. You can see that every time we bounce above the 64,680 level, the market is getting very much pressured from the bears. Nevertheless, since the second week of the July, the market is doing nothing basically from the lows, internal local lows, local highs, local lows, local highs. There is a slight tendency to go a little bit higher, but it doesn't actually look like this market is continuing the uptrend or the downtrend. So right now, after the breakout above the trend line, Bitcoin is locked, and we are waiting for the continuation of the movement. The major move, as you can see, is to the downside. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.